Markets traded in a narrow range today at right around the 6850 level on the S&P, with the S&P up 0.06%, closing right at 6850.92. We've been maintaining above the 50 EMA on the 15-minute chart, and you can see the uptrend that was established during Friday's trading session remains in play. Gamma exposure has been building at 6,900 after the sell-off that we saw following the FOMC at the end of October. And gamma exposure at the 7,000 strike continues to be a magnet to the upside and our year-end target. Zooming out to the daily candlestick chart, as we've been discussing over the last few trading sessions, the support at the 50-day EMA has been holding strong, with bullish momentum continuing as we're seeing a series of higher highs and higher lows. And although we continue seeing gamma exposure growing at the 7,000 strike, we're not seeing a whole lot of gamma exposure growing at higher strikes, which is limiting our year-end target to 7,000. If we do see gamma exposure begin to grow at 7,100 or 7,200, we'll revise our year-end target. But I think for now, the possibility for a huge blow-off has not yet manifested, at least in the options market, with speculators coming in above 7,000. So we'll keep an eye on the data set to see whether most of the GEX hovers between 6,600 and 7,000, or whether we start to see GEX building at higher strikes up into the low to mid 7,000 range. For now, a lot of our trading strategies are focusing on theta decay and premium collection as the potential upside narrows in this tighter range up to the 7,000 mark, and we'll continue maintaining those type of positions over the next 6 to 8 weeks as long as the GEX picture remains as is.
Thanks, Anthony. I wanted to make a point to our viewers that even with the variety of potential pathways for the market looking ahead, we're still finding opportunities most days. Around mid-morning, we noticed QQQ had actually a pretty large gap up today. It sold off right at the open, but as the morning went on, we saw positive GEX. The largest GEX cluster at 622, despite price declining from that point. So we posted in our zero DTE setups channel that we were taking a trade on MNQ, which are the NQ micro futures, for a directional move off of that 618 QQQ area back up to 622. So we got in at 25, 489.75, picked up 5 micro future contracts, and flipping over to our time machine, which is one way that we can look back and see what happened with GEX and price action as the day went on. We caught this spill off here, as you can see with this red candle, and it only took 11 minutes, but we saw a move up. And so it ended up being a great entry for a long trade. So you can see we closed at 621, and we ended up capturing roughly 60 points on MNQ in a matter of those 11 minutes. So it was almost $600. Before we move on, briefly, I wanted to just make a point about the big picture on QQQ. We're still holding this important 620 area. You can see there was an attempt to break down below it. And of course, that's where we bought for the trade this morning, was just below 620. But we still have meaningful GEX at 625 and at 630. So what we're watching on the downside, if we lose 620, possibility to fill this gap to Friday's high. So we'll just have to watch what happens here. We're still in buy the dip mode, but we have risks in both directions.
Thanks, Sean. Next, let's move over to AMD, one of the big movers in today's trading session, up 9%, closing at 258.89. We were discussing AMD in this morning's live stream, which starts every morning around 10:30 a.m. Eastern. You guys can check that out absolutely free. I'll put a link in the description below. But AMD dipping with the rest of the market over the last week to week and a half, finding some support during Friday's trading session just above the 50-day EMA, along with the S&P 500. We noted big support at the 50-day EMA. Well, same thing on AMD. Gamma exposure throughout this time period has remained positively skewed up here at higher strikes between the 245 all the way up to the 270 strike. You can see most of the volume in the options market today between that 250 to 270 level as well. And in fact, if we just look up higher up the chain, we can see the 300 strike is continuing to grow in positive GEX. Large options volume coming in today. That doesn't look like much. It's over 50,000 contracts traded at that 300 strike. So as long as we keep seeing some of this outlier volume coming in at 300, that is a potential year-end to early next year target. And in fact, if we move over to our 3D surface model, we can actually drill down and see what expirations most of that GEX is concentrated at. Of course, for this Friday, we have massive GEX at the 260 strike, and so we're nearly there. And basically that move happened today towards that major GEX concentration. And if we come back though and take a look at where most of the gamma exposure at the 300 strike is, we can see here on the back end we've got quite a bit in the January 16th expiration, as well as a little bit in the December 19th. And that's basically just telling us that market participants are starting to build positions out in December and out in January at this 300 strike. So it's the back end of our 3D surface model, but it's important to get a sense of where market participants potentially think price could end up over the next 2 to 3 months.
Let's take a look at the VIX today, which did make a lower low compared to yesterday. We still see a lack of GEX really below 16 now, but the area between 16 and 18 has a lot of negative GEX, and we currently appear to be stuck in this zone. Now, what we want to watch out for is if the VIX can make it over this 18.5 area, which is roughly where the flattening whole moving average is, then you might see a spike to higher levels, maybe 20, maybe a little bit beyond that. And we can zoom in even more and look at the 2-hour chart, which is also suggestive of a possible move higher for the VIX. According to the 2-hour chart, would have room up to just over 19. But below that, we may go toward that 16 strike, which we saw represented the last larger negative GEX cluster. 16.5 is the lower Keltner channel here, is a reasonable downside target if we see the market continue to push higher and the VIX drop lower below the 1730 area.
Next, let's take a look at Meta, another name piquing a lot of interest for traders. Ever since Meta's earnings report, it has been in a very sharp downtrend today, and down another 2.88%, closing at 609.01. Gamma exposure has been growing at the 600 strike, and over the last several trading sessions, we've seen most of the price trading basically between 625 and 600. So obviously our lower dealer cluster zone is down here at the 600 strike. We're actually not seeing a lot of negative GEX below 600. This could offer some potential support here around these levels. And this was another name that we were actually discussing in our live stream this morning. Although the potential for a bounce off of the 600 level is growing, the fact that we're seeing this huge overarching rollover in Meta's price action ever since April, as well as breaking below that 50-day EMA following its earnings report, to us, this kind of falls in the category of trying to catch a falling knife with no guarantee how high any bounce could potentially be. So while I know a lot of traders are looking at this for a potential mean reversion play, from our standpoint, for a swing trade at least, the moving average is moving down very quickly. Gamma exposure is negative. You can see crossing below the 0 gamma exposure level, which is currently sitting around 650. Not seeing much volume in the options market below the 600 range either. However, our thinking is that there may be more consolidation between 600 and 650 rather than a big mean reversion setup back to 700. So our views have changed a little bit over the last couple of weeks ever since earnings, especially with more negative GEX coming in the options market. And that's actually kept us out of a long position in Meta, and rightfully so, as we've seen price continuing lower over the last 2 weeks.
Thanks, Anthony. The last one I'll look at today is Apple. It's been in quite the uptrend since this summer. And going along with that, we have positive GEX. We have price holding above key moving averages. And even today's tiny red candle is still holding key support. We also have positive GEX and volume pretty much everywhere from the 270 through the 280 strike. We haven't quite reached 280 yet, so this seems like a very probable target given how much positive GEX we see there. GEX does drop off significantly after 280, although we still see clusters all the way up to 300 that are worth watching. Let's flip over to our 3D model, which actually allows us to see each GEX cluster at particular expirations. So this Friday, we have 275 as the largest cluster. Looking ahead to November 21, there we see 280, and there is a smaller contingency of 280 at this Friday's expiration. But as of now, it looks like that 275 and especially 280 are possible targets in the near term.
And for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We do have a few spots remaining on this promo, but it's going to be ending soon, so definitely be sure to take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.